Good morning, traders. This is Alla Peters on November 1st. Let's recap this historical week and let's discuss why Tuesday and Wednesday were the most powerful and the most important days since 2008, which again we dissect to the tick in Fibonacci Mastery course every Friday when we review charts going back all the way to 2008. On this beautiful Tuesday and Wednesday, we were holding our breaths, paying attention to this support. If this support was not respected, market would go into complete free fall. As I said on social forums, as I said before, this was the most important day since 2008. I said if we're expecting rally, we all can exhale for at least a little while. We received a little rally. It's only a little. It's only for a little while. Eventually this support will be out and market would go into free fall with 2300 next. Dance at 2500 will remain for a little while, just like 1500 in 2007 before market went into free fall. But first let me remind you the significance on this level at the start of this rally in 2016. Do you remember this key resistance 2200 number? We discussed it's a brick wall with 2300 to 2500 to follow. What did the price do? This. Shock or not, price collapsed for 6 months until the election night, when bullish rally skyrocketed until 2300, 2500 to follow. Shock or not, shock or not, shock or not, it never gets old. This is the start of 2018. I exit my positions before sell-off. I say, we reached institutional reversal zone, not the place to buy. I don't care about extra dollar, I care about sleeping well at night. 2500 is key support. This is a market next. This is a market today. Time and time again. In worthless bullish correction, Fibonacci support respected. Worthless bullish dance. Boom. And this is the events of this week. 2500 holding the key. We're very, very happy to see that this key support is respected. Just like resistance in 2016. For at least a little while. If price will continue chopping at this support, market will be in pain again and again and again. Day trading will be pain and nightmare. This support is out, we will have spectacular opportunities across the board. VIX will go through the roof. Amazon will go into free fall. And just to remind you, do you remember what happened on Netflix this week? This is Netflix before earnings. 315 is key support. Exact same place where S&P is dancing now. Do you remember what Netflix had done next? This is key Fibonacci resistance at the time of the earnings. To the downside, we are watching this key support. We're discussing how crucial this support is. 7 million subscribers added does not mean a thing. Fibonacci means everything. 315 is out. Netflix collapsing next to 291 and continues its free fall further out. Price reminding you, if investing on fundamentals meant a thing, every single person on the planet would be Bill Gates. It does not. Shock or not. Identical dances on S&P. Netflix collapsed $140 per share from key Fibonacci resistance until Fibonacci reversal zone. This is exactly why Netflix is rallying. All levels identified months in advance on S&P, days in advance on Netflix. This is Netflix now. Anyone surprised why Netflix in pain? Should not be. 315, which was key Fibonacci support, right now key Fibonacci resistance. Boom. Love, love, love what Netflix reminded us. Knowledge of price action and Fibonacci is power. Everything else background noise. Fibonacci is the only natural predictive tool in the markets. As let's take a look at what played out on oil. This is oil now, dancing at key Fibonacci support. Before we review the events of oil next week, let's walk down memory lane and remember what played out on oil before. Oil in free fall in 2016. This is a chart from the trading room that's been present in the trading room since 2011. Oil sold off and reached trend inception, just like Netflix had done. This is what oil had done next. This is oil at the start of 2018. Bullish rally skyrocketed from trend inception, 29-26 area, and reached key Fibonacci resistance, dancing in excruciating pain at this key support where oil trailing through chloral from higher up to 77. This is oil now. This morning, as expected, reached 77, except it's no longer trend inception as it is in 2016. It's trend reversal. This key support is crucial on oil. Was key resistance. Yesterday morning we discussed that if on day trading chart oil will collapse to reversal zone, it's a beautiful place to be. When day trading trend inception correlates with institutional support, do not short. What am I expecting on oil? I'm expecting oil to dance at this support, dance, and then crash to 55. Ultimate Fibonacci resistance that taken oil almost a year to break through will be key Fibonacci support. The only thing that's blocking this sell-off is this. Once again to remind you, it was key support on S&P correction 2014, 2015, 2016, famous 1800 number that shown you if this key support respected, bullish rally will go on to 2200, 2500, 2600, 2800 next, which is exactly what price had done. So, as you're witnessing the power of the method, no matter what chart you trade, no matter what instrument you trade, the power of Fibonacci, it gives you all these levels, days, weeks, months and years in advance, no matter what chart you trade. Just to remind you, this was yearly chart in 2016, present in the room since the inception of the website. This is your investment decisions. Shock or not. Exact same accuracy, exact same place where oil is now. Exact same place where S&P is this morning. In a lot of pain. Apple looks the best, by far. Frozen in massive correction. The support on Apple holding the key. And this is S&P. Here's my public post on Amazon in 2016. What did I say? I said if Amazon collapsing from reversal zone 700 level to 500, it's a beautiful place to be. Bright green line, the same exact number as 1800 on S&P monthly and yearly chart. This was Amazon traders at the start of 2016. 500. Not now. Anyone surprised why Amazon sold off? 2000. Ouch. All the way to? Ouch. 1500. 500 plus per share. Amazon came out with bad news when Amazon was already at 700. Do you want to invest on fundamentals, on news events? Ouch. For Amazon. In the next year, I expect Amazon to here and then here. Price collapses 80+% when Fibonacci reversal zone is reached. Not the place to buy, the place to exit. That's exact same place where the markets are right now. However, gold is a beauty. Metals and bonds setting up. Historical times will live in. Some instruments will crush. Spectacular opportunities will be present on others. And that's the power of the method. What you decide to trade, absolutely up to you. But as you saw on very powerful lessons this week, buying based on spectacular earnings, worst possible thing you can ever do. Acquire position at Fibonacci reversal zone, not a brilliant thing to do, no matter how spectacular earnings are. Apple looks the best. Not collapsing yet. Bullish rally started 2016 trend inception. Not now. And if I walk down memory lane on Apple, do remember what played out then. This was Apple in 2015-2016, dancing at Key Fibonacci support, famous 9300 number. Just like S&P this week. What do I say? If key support is respected, Apple will head higher, which is exactly what Apple had done. This is Apple now, at the start of this year. Doubled to 181, showing you 194 and 214 to follow. However, Apple went through war zone, ultimate war zone, being frozen at this resistance where S&P is sitting right now at key support. Prior to the earnings we discussed this year, this is key support 157. What did Apple do? Respected this support and skyrocketed higher and higher and higher. Only Fibonacci will give you this much accuracy. Nothing else ever will. Apple reached decision point 2, struggled between the levels, and continued on. Time and time again. Now Apple frozen in correction, however looking a whole lot better than Amazon. And that's the power of the method. Rules are met, take a trade. Never pull a trigger randomly. Never buy overextended rally. If you start acquiring position this late, what is the best case scenario? Pain and torture. Apple did not collapse like Netflix from decision point 2, however, it chopped between these two levels for many, many months. This is your investment decisions, traders. What you choose to trade after you learn the method, absolutely up to you. Rules are met, take a trade. Never buy into Fibonacci reversal zone, ever. Buy from Fibonacci reversal zone, as hedge fund manager who is in the course right now had done, exiting position here. This is the reason why gold is rallying, because key Fibonacci support present in front of you for years in a play right now. Not on oil, it's a reversal zone. So, historical events in the markets, knowing what to do with your positions is the key. If you're an oil trader, if you're S&P trader, if you're Apple trader, choice is yours. Exact same strategies apply. Ultimate points of entry at trend inception. Never short into Fibonacci support. This was the key support yesterday, traders. This was a historical event we've been watching across long-term institutional charts. As I warned you, if key support is respected, we all can exhale for at least a little while. Here's DAX weekly. This is where DAX sold off from this year from Fibonacci reversal zone. Let's take a look at what's happening on DAX right now and what to expect next, shall we? Why is DAX finding support? DAX, ladies and gentlemen, here's the reason why DAX is finding support. It's trend inception. It's a reversal zone on DAX. What is a war zone on DAX? That famous bright green line. Just like 1800 on S&P in 2016. This is key resistance on DAX. As expected. As Euro had done this year. It's all the same. Do you remember Euro 2600? That was the start of this year. This is what's holding the key on Euro. 118. But first things are first. This is Euro now. Ultimate low and this key resistance. Very similar to DAX. On S&P this morning, it's painful place to be. So here's a performance in the trading room this month. As you can see, drastically higher volatility, drastically higher number of trades. Just to remind you, trading room is open less than 12 hours per week, Monday through Thursday, on average 8. 2 positive trades were out. 2 negative trades were out. That's exact same concept you learn in the course. How to apply sniper's mentality, how not to waste your time. Please take a look at this and what this means. Out of 30 trades, 26 trades reached Fibonacci targets. Every single trade, different stop, different target. If you're trading against the trend, you exiting at decision point 1, which played out on multiple occasions. 23 trades reached decision point 2, key trend target. This is when you take profits off the table, and if you're trading multiple lot size, you're moving your stop outside of break even. When price skyrockets to reversal zone, reminding you to never ever ever disrespect this key target if you are trading with a trend. Multiple times we were in the room when price was frozen in counter trend move. Multiple times I warned you. The only option is present counter trend move. Decision point 1 is a problem. On 4 occasions, price collapsed before touching decision point 1. Those are negative trades. And that's the market this morning, reminding you, if you choose to buy price outside of decision point 2, nothing good is possible. Look at this. Ultimate test of your knowledge, ultimate reminder. Doesn't matter if you trade Netflix, doesn't matter if you trade Apple, doesn't matter if you trade oil, S&P, whatever you trade, or DAX, price action remains the same. Don't buy extremely high. Don't sit and stare at the charts, and most importantly, never ever ever disobey the most important rule you learn in the course. And if you do, you understand extremely well why market had been in pain. Until mid-December, I'm teaching Fibonacci Foundations live. After mid-December, Fibonacci Foundations only recorded classes. If you're joining us in Fibonacci Foundations, you're joining at the biggest discount in 8 years, never offered before. Live classes on Thursday, access to the trading room, and you have opportunity to review all prior recordings. If you would like to dive right in, this is the first time ever in 8 years we are offering the biggest discount for Fibonacci Mastery course. Only one space left. You can sign up this weekend and you can start next year, not a problem. As soon as the space is filled, we're back to regular price. I want to make sure, because of the events in the market and the historical formations, you at least learn what price is telling you. Because, as you saw throughout the day, this is only temporary support. Know what to do with your positions, as market volatility will become only worse, as market formations, collapses and rallies will become only more powerful. And what else is most important you learn in the course? How not to waste your time, how not to babysit this, how not to lose money. As we've been staring at this for the last hour and a half, as we knew that buying market this high is never a recipe for success, as again one of my favorite events of the year, spectacular collapse on Netflix, as expected. Earnings don't mean a thing. Fibonacci means everything. Buy at trend inception when rules are met. Don't ever, ever, ever buy at decision point 2 or outside. That was a lesson on Netflix. And that's a lesson this morning on S&P. Rules are met. Take a trade. Rules are not met. Don't touch this market. If you ever have any questions, pretty please do not hesitate to contact me. Simply click on Contact Us page and feel free to call or email me. I will promise you I will respond even on weekends. 925-257-4298 or info@fibinstitute.com. Thank you, traders. Look forward to seeing you in the course.